Hello everybody, it's July 4th, 2022. Happy birthday, America. We're going to jump into the Bitcoin chart here. First, let's take a look at what I said on Friday. Basically, at the time, we went over the fact that the previous Monday it was unclear if that second wave had completed or not, or if we were going to go down into that 19K region again. And then, obviously, earlier last week we moved into the 19K region, and then we saw that pump up that got sold down pretty quickly. So we haven't really had too much action that's been constructive since then, but basically at the time, on Friday I said if it remains above 18.6, we could see the bulls still kick this off. If it goes below 18.6, then we're likely going down either to test that 17K bottom or potentially down lower into the 15K region. If it does go into the 15K region, that does break the impulse on the macro chart. And so my plan of action at that point would be probably to sell on the next bounce, back up into the mid-20s. So if we get 15 and then back up into the mid-20s, it's probably a decent place to de-risk significantly. As you know, I was buying in the mid to low 20s to accumulate, and obviously under 20K I've been accumulating spot positions as well. But if we break to 15 and then go back up to mid 20s, I'll get out of all that, basically a break even. So at this point we don't really have to worry about it. We have not broken even 18.6, but we really don't have much in the way of constructive action. So let's go over, first off, if you haven't seen my prior videos going over this entire path down since November, go back and review those. But basically this bottom here at about 17.6 gives us a very, very complete looking correction down for our macro fourth wave. And so that's not the only thing that we need to see. We absolutely do need to see a completed bottom like that, but it's not the only thing we need to see. We then need to see the bulls take over and give us an impulse, which they seemingly did. They gave us what can be considered a pretty full 5-wave count up right here off of the low. And so once we got that, once we hit this region right here, I said, you know what, I think there's about a 70% chance the bottom is already in. And that 17.6K low is, was the low of this bear market, and we're ready to start a new bull. In order for that to, continue proving that scenario and bring that probability up higher than 70%, it's going to have to continue to follow the path laid out for it, which is basically this then makes a first wave. Second wave should hold generally this green box area, which we have done so far. We spiked down below it a couple times, but not concerningly low at all. Okay, so we have potentially a first wave and a second wave in place now, and we should then see a nice big move up in a third wave as the next move. And now that we've gotten kind of a new low here for the second wave, let's just modify where these targets are. So this third wave should hit somewhere in here. We'll put this in now because this looks like a pretty full second wave at this point. I don't think we should expect any more shenanigans downwards, probably, if the second wave's completed. But third should probably go somewhere into here. We should see this region basically 25 to 26K, anywhere in there. So if we can get up there in the relatively near future, start making a line upwards to that region, and it's not going to be a straight line, of course. It's going to have some, little ups and downs along the way to make 5 waves up in that third. But if we can get that, then the chance that this was the bottom, that goes up to about probably 80% then. I wouldn't say it's a full, 90, 99% at that point, because it still then needs to play out the larger fourth and fifth as well, which should be a fourth wave pullback generally into this area, kind of low 20s, hold that area as support, and then move up here for a final push into the high 20s, 27 to 28 region for this fifth wave. And this is just based on our first and second right now. If the third wave extends or truncates, basically once the third wave is done, I can get a better target for 4 and 5. But as of right now, that's what I'm looking at. So if this is going to prove a bottom is in, we should see that. Okay, that's what we need to see. Once we see that, my probability of a bottom being in goes from 70% up to like 95%. I mean, almost virtually guaranteed. The best odds that you can get, basically, that the bottom is in is if we play this out. Okay, and then the pullback after that will be the best buying opportunity we've seen in months and months and months. All right, so that's the path that we need to take. So at the beginning of the video, I said, we do not have clean action. And so that is the concern right now, is that this move up off the low, if we go down to the 5-minute chart, we have a kind of an ugly 5 waves up that make up this move right here. And so, there was a chance we were going to go up. That's fine. But the more concerning thing was it was a pretty clean 5 waves down. All right. Now, what we've seen with this move here is nice in that we've basically invalidated that 5-wave move down at this point. So the concern was that this was going to be, a first wave down and then a second wave and then a third, fourth, fifth down to that 15K region. I think we can probably, we're not quite out of the woods yet, but we're nearly out of the woods on that. Especially with this little spike down, that was weird action there. It's right at the top of the range where that could still potentially be a second wave. This could be 1 and 2. It's really getting pretty high here though, and if we go up even just a little bit higher, break above that previous high, that pretty much invalidates the impulse completely on the way down, which is good, obviously. But the bulls really have not given us anything worthwhile to work with either, right? Because this spike down came all the way to the 0.93, which is significantly lower than a second wave should go. So this really can't be our 1-2 on the way up. So we're in kind of a weird situation here, where the micro action is not giving me any indication at all of where it wants to go next, right? We've got kind of a failed impulse up, a failed impulse down, and so this, based on that, this could just continue chopping sideways. Maybe it just kind of breaks that low nominally and then we go up higher from there. I'm not really sure what exactly to expect in the short term, except for potentially whipsaw. Right, we may just be in a whipsaw environment where we are just going to chop around in this region for a while. If we get above this high, my hope and expectation would be that we begin making this move. So if we can break that, like 20.9, we should be in a better position to start heading up into this third wave. I just don't know how this is going to count. I guess the best way that I can describe this would be something along the lines of a W, X, and Y, and maybe that's the end of the second wave there, and now we're trying for an actual impulse up here. That's a possibility, and there's maybe something to be said about that. This could potentially be a 1-2. This could be part of 3, 4, 5. We could get a little micro first wave up here to the 618, and then a pullback down here to the 382, and then launch up to that target. That would be a pretty decent way to get there. But that's all conjecture at this point. Obviously, nothing is really proven that yet. So basically, when the micro action like this is so messy, I just have to fall back on the larger time frame chart. And this is still a pretty decent impulse. All of this action falls within this second wave territory here, and so realistically, I'm not super worried about this until we really go below this 17.6 area. Below that low would invalidate that whole 5-wave move up. So that's kind of, if you have leverage longs especially, that would be the place to put the stop, is below that last low. Of course, there's a possibility that it comes down and kind of double bottoms and then goes up, but when you're playing leverage, you don't want to mess with stuff, because the likelihood is, instead of a double bottom, that this would just continue crashing down if it did fail here. But in any case, at this point in time, the bulls are still in control. At this point in time, the bulls are still in control, even though the micro action is messy. So what is the bear scenario? And I had on here before maybe 1 and 2, with that being the second wave there. But again, we've kind of invalidated it with this move up, so I can't really even say that with confidence either. Trying to see if there's any clarity we can get here at all. It is still possible, I suppose. Let me get rid of this for a second. If this is a first wave down, that's in a fine area for a second wave. We might go up here. All right, so I think what we can do, let me just label this real quick as a possibility, bearish alternative possibility. 1, and then 2, since we've come up so high, I would expect 2 to break this high slightly, but then reject. 3, 4, 5. I'll move these around in a second to where they should actually go. But generally, this is what I would probably be looking at in a bearish alternative scenario if we don't get this and we reject from this danger zone that I'm about to put on here. So conceivably, this could be A, B, and C within the second wave downwards. When the action is so messy like this, there's just a lot to consider. So this generally would be the danger zone right here, even up to about 21.6. Based on the fib extension for ABC here. Based on a fib down though, really shouldn't go beyond the 886, so that's more like 21.4. So I'm going to bring this down just slightly. Okay, if we can clear more like 21.5. If we can clear 21.5, we should be in good shape. All right, but for now, this is possible danger in the bearish alternative. All right. Hopefully that makes sense. So again, just to recap here, we do have 5 waves up. This is bullish. We have a completed correction potentially here for a second wave. It held the area it needed to hold. That's bullish. And if we break through this box, that's bullish, and we should be heading up here. All right. So this is just kind of the, what I need to be aware of here as the bearish possibility, the bearish alternative possibility, is that this is resistance that we really need to break through for the bulls to prove themselves, basically all the way up to about 21.5. Above 21.5, I'll start breathing a little bit easier, and expecting the bulls to continue playing out that larger impulse as well. But until that happens, we do have to be aware of this as the bearish alternative possibility, where we're heading down further. And let's see where that might project to. We don't have an actual end right now for this second wave, obviously, but just, pretend it just goes somewhere slightly above and then rejects. This would be actually probably right about there. And oops, 4 probably right about there, and 5 potentially down. So this is, again, is that kind of scenario where we're going down to that 15K region. And this line right here is the really important one, where we don't want to see it go below that 15.7K region. That would invalidate the entire impulsive move off of the December 18 lows. So we definitely don't want to see that break. And that would be my signal to try to get out of my spot buys on the next bounce, like I said. All right, so hopefully that made sense. I know this is getting convoluted again. I wish it would provide us a more clear path, and maybe it will soon here. But essentially, just know what we're looking for here. Above 21.5, we're probably in pretty good shape as far as things go, and can expect higher levels to come. So that's our bull line there that we need to break above. And then bear line, 18.6 would be a warning, but not completely awful. If this just continued chopping and broke there and then went up, that would be fine too. Realistically, if we just use this as our, let's just do this. We'll pull a fib here. Where's the 886? That's 18,000. Okay, so this, I'm just going to move this line down, to be honest. Okay, 18,000 is kind of the line in the sand, where below that we are probably going down in this alternative scenario instead, because that would break the 886 of this move up, and we really shouldn't see that happen. And then obviously confirmation of that would come from a break of that 17.6 low, so I'll keep that on there as well. And we'll go from there. So we'll see what the rest of the week brings, and I will talk to you all on Friday. But those are the levels to watch right now, really. 18K and 21.5. Anything that happens in the meantime is really just kind of chop. So I'll talk to you guys on Friday. Again, happy 4th of July, and have a great week. Make sure to hit the subscribe button and the like button. Almost forgot that. And this video is one I did a few weeks ago talking about the macro bottom. It goes over some of the higher time frame things. It's worth watching. All right, good night, everybody.